Hello and welcome to a fresh new edition of Bazaar Morning Call. It's a Friday morning, which means that the end of the week is in sight. I'm Prashant, with me, my colleagues Sonia and Nigel. Everyone is cheerful, everyone is smiling.
That's
good.
The magic of a midweek holiday, right? You come back from the midweek holiday and then bang, it's Friday again. So there's got to be cheer because of that.
Absolutely. But it also leaves you wanting for more, right? Which we won't get. Now, I don't know when is the next midweek holiday.
More.
2 weeks more?
Yeah, the Bali holiday we'll get, right?
Yes, that's
Monday.
a Monday.
Monday.
Monday, yes.
Yeah. But this week there's a lot there are many festivals coming on Sunday as well. So.
All right, so, on that optimistic note, let's start with the market. Just a quick couple of things in terms of how we are looking. Overnight, it was an absolutely choppy kind of session, very, very choppy. And by the close, US markets indices were down about 1.5% or so. So it's largely a wait and watch ahead of the jobs data number, which we get later today. And I think that is the one data point which will help in clarifying what happens next. I'm talking about the September non-farm payrolls data, for which expectations are that the number will be around the 260,000 odd mark. And I think, the criticality of that at this juncture cannot be overemphasized. Oil prices are the one big risk that's almost knocking at 95. And the dollar rupee, the rupee is now almost 82 here, but, in the NDF market, that is already at about 82.3 or so. So we'll see where the dollar rupee rate settles as we open up this morning. That's the other risk. But all of it, of course, is connected to what happens out of the US in terms of the dollar, etc. And that ties in back to the data point, which is the jobs number, the one big data point that the Fed is focused on. SGX is indicating a slightly lower start by about 45 points or so. Sonia and Nigel, hi.
Hi, morning, Nigel. It's like those minor roadblocks, right, for the Indian markets, that is. Every point, there's a data point from the US, and then the market sort of digests that and then moves on with equal ferocity. I guess that's what's going to happen in the next few days as well. Purely for today, the SGX Nifty is indicating a start in the red, down about 30-odd points. That's because the global markets were under pressure. So the Dow saw a fall of almost 350 points overnight. And, as Prashant was also pointing out, all eyes will now be on the US jobs data that come out later today. There are some estimates that are even looking at 275,000 jobs. And here's the problem with that. If there is a very strong payroll data, then it adds to the, the services index data, the private payrolls as well. And then the Fed may need a tougher stance to slow the economy. So it's kind of a lose-lose situation for equity markets both ways. But in any case, that's a data point that we're going to track very closely. For the Nifty itself, we've conquered that 17,300 mark yesterday. So the uptrend is intact, although there may be a few hurdles along the way. FI is bought in the cash markets for the second straight day, bought about 280 odd crores. So, lots of ifs and buts, but I think the big data point to watch, as you said, would be the jobs data.
Oh, absolutely. And, Sonia, ahead of this big number, because you don't know what the number is going to be, US markets have had a very tentative trading session. So why do you want to kind of go out there and take a big call one way or the other? I think it makes sense to, and that's why I said wait and watch, right? It's not as if one session is going to kind of leave you out of money. Better to wait and watch rather than sort of jump headlong, taking a position or a view one way or the other. No point doing that. So the global follow-through that we were talking about, the bullish follow-through that we were talking about, was interrupted, largely because of fears around this. And even before the jobs data has come in, you had three regional Fed presidents who came in and sounded very hawkish, saying that rates need to be higher for longer, restrictive, all that once again. So that rigmarole continues. As I said, 260 to 270 odd thousand is basically where you want to see this number at. Anything over 300,000 is going to shine the spotlight in a very positive way on the US economy, which also on the flip side means maybe all this higher rates for longer is going to come true. And anything below 200,000 is going to be considered extremely weak, which means the economy is slowing much faster than expected. There is, of course, the other debate which is happening is the Fed already over-tightened. And I think, this data point will talk to that. 2-year, by the way, the 2-year Treasury yield is back above 4%. Actually, it took out 4.22, which is an important technical level. But again, these levels are also on hold till we get this data point. The dollar index, it was looking very stretched, and that's why it sold off from 115, 116 kind of levels. But the positioning is a lot cleaner. So it's lighter in that sense. So if the data is very strong, I mean, you could see the dollar index zipping higher as well. So as I said, wait and watch. The Nifty, in terms of levels, turned south from the 50% retracement of the down move from September 15th to September 30th. This is the 50% Fibonacci retracement, which stands at 17,421. The high yesterday was a little higher, but approximately that's the level you'd want to keep in mind. That's the first level to take out in that sense. Banks lost steam, and bulk of the reason why the market came off is because momentum in banks started to fizzle out a little bit. IT, by the way, the IT index has done 3.5% this week. Is this the start of some basing out, or is this just some position building ahead of the earnings season, which is not very far away? We'll find out. It's possible it's the former, that this is actually the beginning of perhaps a slow process where things will start to base out. I mean, I've said this 3 times, 4th time. This also will depend largely on the health of the U.S. economy. 65 to 70% of IT services revenues are the U.S., and markets will be keenly awaiting the health of the U.S. economy. Crucial to watch, as I said, oil. Oil prices are up almost $11 from the lows last week. $11 in a week. And it's marching higher. Above 96, it exits a downward sloping trend line, a channel actually, which has been in place for the last 4 months. You want it contained. Rupee is falling, which again raises the risk of some equity outflows. We saw that happening last time. A rupee weakened very substantially, and then it fell as the dollar started to behave itself. So you want these two factors sort of well behaved and well contained as well. So there's a lot of moving parts, but the big one is the jobs number, and ahead of that, I would say you just want to wait it out. Sonia, Nigel, hi.
Well, morning, guys. I'm just looking at the key reason that we've seen a bit of a bounce. It's because of the institutional flows. And the few trading sessions we've had in October, the FIs and the DIs, both of them, they're buyers. So close to around $300 million between them is what they're bought. And for me, that's the biggest trigger right now. That's the only reason that the markets are staying afloat, because otherwise there are fairly cautious signs, whether you're looking at Brent crude prices, the US 10-year yield, or even the dollar index. But let's get to the F&O setup. Now, in a live trading market, well, you have the premium on the Nifty or the discount that you track. And yesterday, it moved into a discount, telling you that there were some short positions that were created. So on the FI side, it appears there's a bit of an arbitrage opportunity that's taking place. They're buying in cash and they're shorting futures. Even yesterday, they added close to 3,500 contracts on the short side. They continue to remain net short. They have close to 80% of their positions on the short side. But yesterday, on the Nifty, that appeared there were short positions created. But on the Nifty Bank, there was some unwinding of long positions, because there was some shedding in terms of open interest out there. Moving to the options data, well, the 17,400 call, 17,500 call, very, very active in yesterday's trading session. And there was aggressive writing being seen out there. The glimmer of hope is the 17,400 put as well added close to around 18 lakh shares. That gave you a sense that there is some kind of writing even at those levels. So what's the crucial level you're tracking? As we said yesterday, 17,450, 17,500. That's the resistance zone. On the downside, there is support at around 17,150 to around 17,200. That I say because of the writing we saw at around the 17,400 put. The technical levels as well come up for you on the screen. 20 to 50 DMA, hurdle levels on the upside. On the downside, at least as of now, the market believes the 200 DMA will hold out. Just a quick word on the Nifty Bank as well. Yesterday, there was some unwinding of long positions. It appeared there was some bit of profit taking or some bit of fatigue seen on that index. We have the 50 DMA, that's 250 points away from these levels. That holds the key according to me. If the Nifty Bank can defend the 50 DMA, then the bulls will be there with a bit of a hope. The one that's making me uncomfortable is the way we saw the rupee move yesterday towards that 82 odd mark. So an eye on the rupee as well as keep an eye out on the Nifty Bank 50 DMA, crucial factors for trade today.
Oh, absolutely. And the SGX Nifty for now is indicating a sharp 50-point slide. But I'm also watching out for the corporate business updates that have come through. And the big takeaway really is that things are definitely improving across India Inc. So just take a look at what we got in the last 24 hours, right? Titan has reported a very strong Q2 update. The overall sales growth came in at 18%. Kalyan Jewellers just reported an update a while back. Very good double-digit growth over there. Phoenix Mills consumption is back in a big way. In fact, back to pre-COVID levels, 130% of Q2 of FY20. So clearly there's a pickup over there. And even in the financials, right? I mean, Equitas Small Finance Bank has seen 20% growth in their deposits. So all around looking good. The only pocket that is seeing a slowdown is the core FMCG businesses. So whether it's Dabur, GCPL, Marico, pointed to both margin pressure as well as lower volumes. In fact, in the last 12 hours, Dabur said that their consolidated revenues is expected to grow at just mid-single digits. So, and in any case, those stocks have factored that in as well. Most of these stocks have been underperformers in the last, week or so. Dabur in the last 1 month has lost about 5%. So barring this pocket where there are still margin pressures and perhaps the rural markets have not recovered as much, the rest of India Inc. seems to be in fine fettle. But for now, we'll be tracking all of these stocks and more for you. Let's also get you some opinion on the equities front. We have Ridham Desai of Morgan Stanley, who says that the market continues to fight a wall of worry and we see triggers on both sides for a major move. He believes the market seems poised for heightened volatility and higher correlations with a likely moderation in relative returns post India's stellar performance in recent months. Ridham has an overweight on financials, technology, consumer discretionary and industrials, and an underweight all other sectors. He also replaces Godrej Consumer with Titan in their focus list, emphasizing the continued preference for consumer discretionary stocks with a focus on the coming strong festive spending.
Well, we've got an equity call. This is from Sridhar Sivaram of Enam Holdings. Sridhar expects the market to be volatile for the next few months as it has been for the year. This is mostly due to global macro factors, but he also believes as the dust settles, the prospects for Indian market is looking very promising for 2023, the remainder of 2023.
Okay, we have one eye on the rupee, as we were telling you earlier. It's an all-time low of 81.94 that the rupee closed at yesterday. Bhaskar Panda of HDFC Bank says the dollar index rose to 112 again as the Fed policymaker spoke of inflation fighting ahead of the jobs data. He adds that crude oil rose post the OPEC Plus agreed to cut production ahead of the winter. In the Indian markets, he says dollar demand was seen from importers as the dollar INR hovered just below the 82 mark. But given the overnight developments, Bhaskar says the dollar INR could move past 82 and trade in a range of 82 to 82.40 for the day.
Well, on bonds, we've got Bhaskar Panda saying that the Indian bond yields also rallied post recent correction as oil prices rebounded. He says the 10-year benchmark bond yield could trade in a range of between 7.45 to 7.5% for the day.
Well, we have a lot of stock-specific action as well to track, and we'll get to that in just a bit. In our special Top 10 segment, we're looking at Titan, Hero MotoCorp, Phoenix Mills, Equitas Small Finance Bank, Quest Corp, as well as Nykaa. Now, these are stocks on our radar on the back of positive news flow. On the flip side, you have Dabur, Torrent Pharma, Biocon, as well as Varroc Engineering. Well, they are stocks that are likely to open up in the red.
All right, Arvind Sanger is with us. He's managing partner at Geosphere Capital Management. He's been pretty prescient about market moves, large moves, and we've happened to get him at critical points, good points, to get his views from as well. Arvind, great to have you with us here back on the program. Thanks very much. So we get this big jobs number for September out of the US today. How crucial is that? And are we still in a good as bad kind of an environment from an equities perspective?
Yeah, unfortunately, we are in that environment, and I guess jobs number is important, but I think CPI data next week is even more important. And the reality is, I think the market is kind of hoping that because of the dovish move by the Australian Central Bank a few days ago, and by the dovish kind of a panic move by the BOE, a week or 10 days ago, that therefore the Fed will also follow. And I think that's wishful thinking, right? That somehow, if some other central banks are taking a slightly less hawkish stance, that the Fed will naturally follow. I don't think that's the sequence in which it works. We are going to need to see some meaningful downside surprises on the job fronts, on the inflation front, for the Fed to really start showing any signs of easing. Otherwise, I think 100 basis points to 125 basis points is our base case of what happens between now and year end. So you can never say never, and the data might surprise us. But I think the one thing that you've just talked about, which I think is very important, is I think oil, the downside to oil prices has been truncated by the OPEC put, and there is real risk here that if the Saudis the Saudis will do what they will do, but if the Russians decide to, in addition, take 1 million barrels of the market, there's been some rumors in oil markets that they might add on or pile on top of this. with the U.S. Having drawn down its strategic petroleum reserve just to help out the Democrats in the election, there is no, offset to that. And therefore, there is some real risk, in our opinion, that if after the, National People's Congress, China starts to abate its zero COVID, then you could get the perfect storm of a sharp rally in oil prices. And that will offset any other benign data because that'll become the next new headwind. So I think there's enough uncertainty out there that I don't think the markets are going to run away anywhere here right now.
Okay, so that's quite a cautious view that you've woken up with this morning, or rather we've woken up to this morning. Arvind, good morning. So what do you do with a market like India now? Do you just stay put, raise cash levels, stay on the sidelines because you are cautious? Or do you think that this is a good time to be buying the dip as well?
Well, look, in terms of US dollar terms, and that's, my perspective, obviously not a local investor's perspective. In US dollar terms, the market has rallied about 7.5% off its lows. So it's had a nice move, but it's not a huge move. I think it's range bound, in my opinion, between the dollar weakness and the market volatility. I would say that we are, trying to pick individual names when they get interesting, because I do believe that India is one of the better placed economies in the world, with the one Achilles heel being current account deficit going out of comfort range because of high oil prices and high import, pressures, and therefore that's the one negative. But notwithstanding that, from a domestic story, from a lot of drivers, and from some of the beneficiaries of some of the turmoil in other emerging markets, particularly China, India is one of the relative winners. So I would say, as we've said all along, patiently buying, not using all the bullets too quickly, because I think the West is quite likely headed to a recession in 23. And therefore, not to be too early on the India bull story, but not get bared up. This is not, India is going to be, in my opinion, one of the better economic stories in 23. So other markets that are more oversold may rebound better. But I think India, if I take a 2 to 3 year view, has one of the best economic stories in global developed and emerging markets. Therefore, I think with a patient mindset, there are going to be good opportunities in India.
Hi, Arvind. I'm sensing a bit of caution in your tone as well, though you're reasonably optimistic on the Indian markets in a little longer time frame. My question to you, Arvind, is when do you get a little bit cautious? Now, we've been talking about decoupling of the Indian markets with the globe. The problem is the way the rupee is moving. We're closer to around 82. And as you mentioned, crude oil prices could spike up as well. What are the levels where you get uncomfortable on the Indian markets on both these two?
Well, I mean, I think if the rupee, if the dollar, if the crude oil price is headed back above 100 and headed towards 110, and there are a few factors that are laid out. China zero COVID going away, which is again unpredictable, but it's possible that that could happen. Russia doing something to curtail its output just to affect global markets because they clearly want to try to hurt the West. And U.S. Strategic Petroleum Reserve release ends in the next month or so because already at multi-decade low levels. Those are all factors that we have to keep an eye on. So to me, the real joker in the pack is not, I think the CPI numbers will abate, but I don't know if there'll be a positive or negative surprise. But the real joker that I really worry about there being upside surprises as to oil prices, and that could be for India a bit of a headwind. So therefore, my caution is coming out of that, and I'm not seeing that as a killer for the Indian economy, but it's certainly a headwind for the Indian rupee and for Indian inflation, because imported inflation, and therefore it starts to, that's the negative feedback loop that the world is worried about, and India should worry about, which is in case inflation comes back. So that's why I'm cautious, and I've been cautious all year.
I think
to be patient, to be greedy.
Be patient, not greedy. Don't completely deploy everything. Have some money in the hands and sit on that for as these things play out. You'll get better prices. Arvind, IT services is an extremely profitable area in terms of just sheer growth that companies have shown, etc. But the valuations got bid sky high post-COVID. and now they've corrected. It's one of the largest market groupings which is still significantly off. This week, the IT services space is up 3%, 3.5%. The Indian IT services space. It's directly correlated to the fortunes of the US economy. So it doesn't necessarily have to bottom out exactly when the economy starts to do better there. There is always lead and lag. What's your sense, Arvind? IT services as a space here in India?
Well, look, the US markets have rebounded. The dollar has weakened, and there's a lot of factors that have driven. There are a lot of macro factors at play. My view is that IT services is obviously a bit of a global growth play, right, from a demand standpoint, and therefore they have sold off. I think they have sold off well in advance. They will bottom well before the Western economies bottom. Calling the bottom in any of these sectors is very hard, but I think when valuations get to where we can make a case that, from a long-term standpoint, a lot of bad news is being discounted. And I think IT services is probably closer to that than any other major sectors in India, even though it's, Western exposed from a growth standpoint, but it also benefits from a weaker rupee. So in my opinion, IT services has started to look interesting to us, not just this week, but in the last couple of weeks and in the coming weeks as a bottom fishing sector because of their rupee resilience. I mean, rupee benefit from weak rupee, and because they've discounted a lot of the bad news in terms of slowdown coming out of the West.
Okay, that's interesting. So you're looking at some of these IT names. Just a quick comment on FMCG because it's very topical now. Almost all companies, Dabur, Marico, Godrej Consumer, have indicated a slowdown in growth and margin pressures. Would you buy the dip there or would you be cautious?
Well, given that they are showing margin slowdown when oil was coming down, I would worry about their margin pressures if oil goes up. So I would stay on the sidelines right now because I'm concerned about oil prices going up.
Okay, all right, Arvind, thanks so much for stopping by and giving us your view. You're sounding a little bit cautious out there, but you believe India's story is good for the longer term. However, crude oil prices, that's a joker in the pack. If that moves to around $100, $110 per barrel, then Arvind says that it'll be time to get a little bit cautious on the Indian market. So a couple of domestic stories still looking up. Well, we'll slip into a short break. You come back, we'll get to the top list of stocks that we're tracking for you.
So the SGX Nifty is indicating that the start will be mildly weak, but we'll take it from there because all eyes, of course, will be on the US jobs report that comes out later. In the meantime, you have plenty of stocks to talk about and the updates from corporate. So let's get straight down to that. Mangalam is joining in first up to tell us how Titan's business update was this time around. Mangalam, good morning.
Good morning. So it was a shining quarter for Titan because, the jewelry sales for the company grew by almost 18%. The overall sales grew by 18%, and that was led by jewelry sales. And it came on a high base. Remember, same time last year, the jewelry business actually grew by 66%. So if you take a look at two-year CAGR, the jewelry business grew by around 40%. That's not all. In fact, the gold jewelry business clocked low double-digit growth, and that's a positive because the diamond jewelry is actually a higher margin business for them, as a result of which the product mix has improved, and at the same time, studded share has also improved, though it is still away from pre-COVID levels. Improvement is something that the street likes. Importantly, they have an optimistic outlook for the festive season. Remember, the second quarter is usually a lean period, and it's the third and the fourth quarters where we do see sales from festive season and weddings come by as well. They've opened 25 new stores in the jewelry business, and importantly, 91 stores across all the formats that they have. The watches business grew about 20%, eye care 7%, other businesses also grew by 58%, and CaratLane 56%. So it's a strong update coming in from a strong company.
Okay, people buying more jewelry. I mean, with the number of weddings that are taking place across India, all the hotels in full capacity, no wonder companies like Kalyan Jewellers, Titan are doing well. But I'm also watching out for Hero MotoCorp this morning. There's a big upgrade that has come in from Jefferies. They've upgraded it to a buy from a hold, and they have a target price of 3,000, which is well above the current market price. Now, Jefferies is bullish on the entire sector. They say that this is a multi-year double-digit growth that's, that's up ahead. There was an abnormal 35% fall that we saw over FY19 to 22, and that has created a very favorable base for the Indian auto sector. They talk about how a margin recovery is also on the anvil and a rising adoption of electric two-wheelers in the last 1 year. And in that context, it's important for Hero MotoCorp today because today they launched the first electric scooter under their own brand, Hero Vida. And that happens later in the afternoon. Now, the Federation of Automobile Dealers yesterday came out with some data very interesting on how the e-wheeler electric vehicle adoption has risen quite a bit. So there's a 200% year-on-year rise that we've seen in September in just two-wheeler electric vehicles. And, particularly within that, there's Bajaj, there's TVS. Hero, of course, hasn't launched yet. They'll be launching the Vida today, so all eyes will be on that.
Okay.
By the way, e-wheeler sounds, it has a nice ring to it. Huh?
You got that out. It's easy to say.
I want to call it e-wheeler. It just conveys the meaning.
Okay, all right. Let's move on then. Mangalam joins us to tell us about Dabur. They came up with a business update. Well, Mangalam, the last few days the stock has been a little bit weakish. The update as well wasn't great, but maybe a bit of a bounce from the lows. What's your take?
Well, it's a muted quarter update that the company has given. If you just take a look at the overall numbers that they've given, but if you take a look at the internals for Dabur, the numbers are actually not too bad. So, consolidated revenue expected to grow in mid-single digits. The India business likely to see a revenue growth of around mid-single digits itself. But here, the F&B vertical, the foods and beverages, actually grew double-digit on a base of 43%. Home and personal care grew mid-single digit on a base of 16.7 odd %. So these are two verticals fighting for the company. What did not do too well for them was healthcare. That saw muted growth, but that was understandable because the same time last year was a very high base on account of high demand for healthcare products during COVID. International business actually has done very well, but the translated business would be impacted because of the currency devaluation that we've seen both in Turkey as well as Egypt. So net-net, the internals are strong. Margins will improve quarter on quarter, but overall year on year, there would be a dip of around 150 to 200 basis points. That too was expected. And as you pointed out, the last few trading sessions, the stock is down 4% in just the last 5 trading sessions. And yesterday itself, if you take a look at the intraday chart, the stock ended at the low point of trade. So even if it opens lower on account of this muted headline number, we may see some recovery for Dabur.
All right. Well, thanks a lot for that. Phoenix Mills, that's really stock that could be in focus today. You don't need Sonal to tell us. You just one visit to the mall and you'll know the kind of consumption patterns. But Sonal, over to you. How's the business update looking?
Yes, well, Mangalam was talking about how people are going and buying jewelry. The Titan update and Kalyan Jewelers update has been good. Looks like they're going to the mall to buy jewelry. And this time around for Phoenix Mills, their consumption, that is the total revenues from all the stores, it is 130% of pre-COVID levels. So that's a big jump. And it has recovered more than the pre-COVID levels according to the company. Total consumption, however, was flat on a quarter-on-quarter basis, came in at 2,200 crore rupees, but that is a good number for the company. Even in terms of their hospitality business, St. Regis, where the average revenue per available room, it has been increasing in last 3 months. In September, it was at 11,242 rupees, which compares with around 8,900 rupees back in July. Even occupancy levels for St. Regis have been decent. They have risen to 85% in the month of September. So all in all, good update coming in from the company. Expect the stock to do well in trade today.
All right, absolutely rocking numbers there from, just tells you the story. Titan, then there's Phoenix, and then between there's Dabur. So you're seeing where there is spending and strong growth and where there is a bit of tepid and muted kind of numbers coming through as well. Equira Small Finance Bank has posted a business update. Abhishek is here with more. Abhishek.
Well, Prashant, it couldn't be as steady as how they have been in Q1 as well. So they have lost out on CASA ratio. However, they have made up with, the term deposit and the bulk deposits. Overall, deposits are up 20.1% YOY and about 6.6% sequentially. Loan momentum, that remains strong at 20.2% YOY and about 5.1% sequentially. Even in the previous quarter, the loan growth was around the 5 to 6% level on a sequential basis. So CASA ratio, however, has declined by almost 350-360 basis point quarter on quarter, but it has been more than made up by the fact that retail term deposits are up more than 8% quarter on quarter and bulk deposits are also up 30.9% quarter on quarter. Despite these heavy cost based deposits coming in, the cost of funds has moved up just marginally by 5 basis points improvement on a sequential basis. So expect the stock to do well in trade today.
Okay, thanks a lot for that. Well, if people are buying more jewelry, they're going shopping to Phoenix Mills, of course, you can't leave the makeup out of it. So Nykaa is also in focus. Rima is joining in to tell us more about that. She's also tracking Quest Corp this morning. Rima, morning.
Hi, thanks so much for that. So about Nykaa, they've signed a strategic partnership with a Middle East-based retailer, Apparel Group. They will be launching a new multi-brand retailer online and offline in the GCC region, which is your Middle East Gulf Cooperation Council. Nykaa will hold 55% stake in the multi-brand retailer through its subsidiary FSN International. Falguni Nair in the press conference yesterday said that the investment won't be significant, at least initially. The other one that we're tracking is Quest Corp, because the company has indicated that it will be divesting stake in its digital risk and compliance services company called Simpliance Technology at an enterprise value of 120 crore rupees for a mix of cash as well as debt. This is to simplify Quest Corp's structure and focus on its core investments. Back to you.
All right, Simpliance is like e-wheelers, right? Simpliance.
You can't get over that, can you?
No, I mean, it's a great one, Sonia.
How many coffees have you had this morning already?
None, that's the problem.
I was just wondering, Prashad's on a roll this
Need
morning.
some caffeine.
I was looking at the
This
news.
shows I'm closely paying attention without coffee, so I'm good. All right, let's talk about Torrent Pharma and Biocon. Pharma space in focus. Ekta is here with more. Ekta, hi, morning.
Okay, all right. We'll go to Ekta in just a bit, I think. So she's tracking a couple of stocks. That's Torrent as well as, another name, Biocon, I think so. But Sonia, let's come across to you. Bazaar Engineering, they had announced a deal a few months ago. Now they're pulling back on the value.
Absolutely, and I'm expecting the stock to be in the red. And here's why. In the month of April, they announced that deal to sell their four-wheeler lighting business. And now they came out with a press release saying that the sale value has been amended. So earlier, they were to receive 600 million euros for this deal, but now they will receive only 520 million euros. Not just that, they also have to pay a 51 million euro compensation for the IPR infringement litigation that is underway. So that is an added pressure on them. And earlier they had said that after this deal, they'll be net cash positive and they won't have any debt on their books. But now they're likely to continue to have debt on the books post the transaction versus an earlier intimation of a net cash of 200 crores. So there's a conference call at 12 p.m. More details are awaited from that. But it's going to be a disappointment. In any case, Varroc has been undergoing a lot of pressure in their European business because of the challenges there. The sale had provided some much needed relief, but now since the sale value has been brought down, I expect the stock to be in the red. But let's try and reconnect with Ekta. She's watching Torrent Pharma and Biocon this morning. Ekta, over to you.
Thanks for that. Well, I expect both the stocks to be in the red. Torrent Pharma, because the Indrad facility Form 483 has become public. The three observations, according to analysts, seems to be tough for them to resolve quite easily. Remember that they already have a warning letter which was issued in 2019, and hence it might be difficult for them to probably lift that warning letter with these observations. That's the feedback that I'm getting at this point in time. So that's on Torrent Pharma. That stock I expected to be in the red. And Biocon as well, they were inspected by the European regulators, their API facility, and there were no critical deficiencies, but there was one deficiency which was cited under major. The company said they will be responding to the agency within stipulated time. It was inspected from 12th to 14 September, and the list of deficiencies were issued on the 5th of October. So we expect Biocon to probably be weighed down by this news as well.
Okay, all right, Ekta, thanks a lot for that. Well, let's do a quick recap then of all the stocks that we're tracking. Positive news flow stocks include Titan, Hero MotoCorp, Phoenix Mills, Equitas Small Finance Bank, Quest Corp, and Nykaa. While stocks with negative news flow include Dabur, Torrent Pharma, Biocon, and Bazaar Engineering. Oh. Okay, all right. Let's go across to Vivek. He's tracking MSCI's November 2022 semi-annual index review in focus, and there could be some potential additions and deletions. Vivek, go ahead.
Well, good morning. Whole host of stocks on the radar. Remember, we just have around a month to go as far as, this is an important development as far as the MSCI Standard Index and the MSCI Small Cap Index is concerned. Quite a few stocks, listed in the Indian markets will be impacted. So the announcements will be done on November 10th. The adjustments would be done on November 30th. So what we are highlighting here, and this is a list, likely inclusion list from IIFL Alternative Research. So now when we are talking about the stocks that will be impacted, some of the stocks that are likely to be impacted in the more importantly and much larger tracked MSCI Standard Index are Tube Investments, and this is a high likelihood inclusion with a potential inflow of close to $204 million. And when you're talking about this particular stock, it will be elevated from the MSCI Small Cap Index where it currently resides. Indian Hotels, along similar lines, a high inclusion candidate with potential inflow of close to 190 million. Ashok Leyland, a potential inflow of around 163 million. TVS Motors, again a high inclusion candidate with around 139 million worth of inflow expected. Schaeffler India, Astral, a medium conviction inclusions from IIFL Alternative. They expect around 109 to 143 million for these two stocks. And some of the other standalone stocks that are expected to be included are Hindustan Aeronauticals, ABB India, Varun Beverages and Bajaj Holding. On the other hand, IGL and Biocon are expected in exclusion candidates from the MSCI Standard Index. Now, when we are talking about the small cap index, whole host of stocks there, what we've done is we've highlighted some of the important names that are likely to see higher inflows. So Vedant Fashion, Metro Brands, Sansera Engineering, LG Equipment, Escorts Kubota and Campus Activewear are some of the likely inclusions, while some standalone exclusions include SpiceJet, Gujarat Fluoro and Kaveri Seeds. So these are some of the stocks that will remain active from now till the date of the likely inclusions and exclusions.
All right, Vivek, thanks very much for that. That's basically an interesting list of names which we will keep an eye on. And the market always obviously also latches onto these things. There is a fair bit of pre-positioning, etc., which is built in anticipation after announcement all the way till the date of, the effective date. So a fair bit of action around these kind of changes. Now, what's happening in the world of commodities? Manisha is here as always to tell us exactly that. Manisha, good morning.
Morning, and thank you for that, Prashant. This is a week that is going quite positive for all of those commodities. So crude oil prices headed for an 11% weekly gain. OPEC and allies, after cutting 2 million barrels per day, although the actual may be just about 1 million because OPEC is already underproducing, markets have taken a positive view of that. And then you have various banks and brokerages reacting. One, Goldman Sachs says that Brent prices will surge to $100 before we end this year. They also say that $110 a barrel as an average for next year is what they are seeing for Brent as well. So bullish news yet again coming in from crude. But the metal prices also are headed for a weekly gain. You have zinc, which is up 5%, copper 0.5%, aluminum up 6% on this week now. LME will restrict new supplies from Russia for many of these metals, and that has led to prices into premium. In any case, the inventories had been declining, and we did see some spot premiums start to build up for many of these metal prices.
Right, Manisha, thanks a lot for that. Well, things could change overnight, as we've been telling you. Big data points awaited, so let's see how the crude market reacts. For now, holding around $95 a barrel. Let's slip into a quick break on that note. On the other side, Devin Choksi of KR Choksi will be joining in for some fundamental stock analysis. We'll also connect with Sudarshan Sukhani and Shrikant Chauhan for some technical trades. Keep it with CNBC-TV.
Welcome back. Well, for starters, the S-Shakes suggesting a bit of a downtake, though earlier today it was indicating a 50-55 point downtake. Now it's indicating a 25 point downtake. Keep in mind, yesterday we came off close to around 100 points from the high point of the day. Devin Choksi of KR Choksi joins us to do a quick analysis on a couple of those stocks. Well, morning, Devin. Thanks so much for joining in. The stock that's always been expensive but continues to surprise on the upside has been Titan. A few years ago, I would have asked you the same question. How expensive is it? What do you do from here? Well, it's a similar question today because those numbers looked pretty good. Your take on the stock at around this 2,700 rupees odd?
Yes, Nigel, good morning. Well, I think the story continues. I think the business of the company remains absolutely, strong in the current situation. With the opening up of the economy, festive season around, at the same time, I think the marriage season coming up next. I think all of this put together, the jewelry business of Titan, along with some other jewelers, I think is really picking up well. And I think that is what we gather from the footfalls also registered by most of the jewelry retailers. So that is where probably I think one can argue that yes, I think this is going to be a better period. If September has given the growth of around 18% in sales, I think most likely October, November, December quarter should be much bigger and much larger one, I think, as far as I think the growth in numbers concerned. So I think on that basis, the momentum continues along with, I think, other verticals that Titan is having. In my viewpoint, I think this stock remains expensive, but at the same time, I think this market gives small corrections, I think, in between. And that is the time when I think you could possibly enter into this company for gaining 15-20% appreciation in a year.
Okay, that's on Titan. What about on Hero MotoCorp, Devin? Jeffries wrote a very interesting note where they said, and this is the narrative, right? After a 10-year, 5-year slow growth for the auto sector, now things are coming back in a big way, and they've upgraded Hero Moto this morning as well. What's your viewpoint there?
Yes, Sonia, good morning. Well, I think the larger part of the story is unfolding. I think most of the two-wheeler companies are basically experiencing the electric vehicle journey now. And probably, I think that to get the larger amount of growth, probably, I think the battery as a substance, I think, would possibly should be available to, I think, most of them, which is now, I think, speed is now expanding as far as, I think, the availability of battery is concerned. And that is where one can argue that the numbers could possibly peak on the electric vehicle side. Looking at, I think, China as example, probably I think we could see in next 2-3 years time the larger population of electric vehicles, I think, in our country as well. And I think most of these two-wheeler companies particularly have had, I think, the relatively weaker season in the last quarter, which in this particular quarter is expected to be slightly better because of, I think, the festive season, the marriage season in the rural India, and possibly, I think, we are likely to see the higher amount of offtake for the two-wheelers. Many companies like this, including Bajaj, probably should be doing reasonably better in this particular quarter.
Devin, hi, good morning. Just two names, if you have any thoughts. One is Mazgaon Dock, which has done phenomenally well. It was up one of the largest volume-led gainers yesterday, 7%. And the other one is Fortis. It was up yesterday. One of the first decent-sized moves after that court order, where the IHH open offer. There was disappointment and the stock sold off quite a bit. So these two names, if you have any thoughts, Mazgaon Dock and Fortis.
So Mazgaon Dock remains, I think, convincing story. The amount of order book they are building, I think, is definitely, I think, suggesting that the way ahead for the company remains, I think, pretty strong. What I would like to see is, I think, whether it is sustainable on a quarter-on-quarter basis, and at the same time, I think that generates enough amount of profits for the company. If that does happen, then definitely I think it's a re-rating story that one can talk about.
All right, Devin, thanks a lot for joining in. It was a short chat, but informative one this time around. Thanks for being with us on CNBC-TV18. Well, let's get a quick handle on what's happening in the technicals of the market. Sudarshan Sukhani and Shrikant Chauhan join in now. Gentlemen, morning to both of you. Sudarshan, it could be a bit of a tricky day, right? You have a big event and you're heading into the weekend. So people may not want to leave their positions open, may not want to take an aggressive call. But your view on how to approach the index today?
Well, the market suggests that they could be choppy today. And that's reasonable after a big rally, not only in India, but almost all over the world. The markets will go into a huddle, they will consolidate, they will decide their next, course of action. So today I would expect choppiness. But because we have a mild uptrend in place, traders who still want to trade should be looking at sharp intraday dips to go long. You must have a dip of at least 100 plus points in the Nifty from the opening price, at which point you could say, okay, I'm buying this dip and seeing what happens. And for the Bank Nifty also, the same rules apply. If there's at least a 200-point dip from the open, then you may consider taking, because then it becomes a low-risk position. Otherwise, if this doesn't happen, stay away.
Okay, all right. Sudarshan, got your point. Let's go across to Shrikant. Morning, Shrikant. What's your take? How do you approach trade today? We are bracing for a bit of a pullback, but otherwise data points not looking too impressive. How would you trade?
Good morning, Nigel. Good morning, Sonia. Good morning, Prashant. I think, the markets are going to spend some more time between the range of 17,430, which was yesterday's highest level, and on the downside, 17,180. To play a pullback rally, we should be buyer if there is any dip correction during the day close to 17,240, 250 levels. We can keep stop loss at 17,180 for creating long positions. I think we should look for taking some contra bets if there is any deep downward tick during the day. On the higher side, 17,430 will act as major resistance. And for the Bank Nifty, the important level is 38,800.
Shrikant, in terms of specific stocks, what do you have? Trades?
So I think SRF is looking good. Number of chemical stocks are showing a lot of strength. They are reversing from their lows. In that specifically, SRF is very close to its important support areas and it's forming some rounding bottom. So it's a buy at current levels with a stop loss around 2540. Again, we can expect 2700 on the higher side. And the other stock which we like is Phoenix Limited, which is around 1420, 1450. Here, the stop loss should be at 1380. We are expecting stock to move towards 1500 or 1520 in the near term.
Sudarshan, how about you? What would your stock ideas be for the day?
Well, Chola Finance is an intraday short. The stock has not participated in the rally. It's having poor relative strength. Intraday short with a stop above 748. India Cement is a buy. It's a relative outperformer as well as shows good momentum. Buy with a stop under 261. Navin Fluorine is a buy. Again, it's an outperformer. It's buy with a stop under 45.30. And my last pick, Petronet is not an outperformer. It's actually an underperformer. But it is possible that it may be bottoming out. At least there are some signs. So we can take a risk. And it's a buy on significant dip strategy with a stop under 202.
Okay, thanks so much, Sudarshan, as well as Srikanth, for joining in, giving us a view on the index as well as on a couple of stocks. For the time being, though, we'll slip into a short break. When you come back, we'll focus on one of the sectors that's come back to shine. That's the metal index. We'll connect with Rakesh Arora of GoIndiaStocks.com to talk about the ferrous and the non-ferrous space. Stay with us. Welcome back. Well, the metal stocks, they've been doing pretty well. The last few sessions, you've seen the index itself recover a goodish bit. Global factors at play as well, with the dollar index cooling off, and even the US bond yields as well did cool off quite a bit. But we're joined now by Rakesh Arora, founder at GoIndiaStocks.com, who joins us on the show. Hi, Rakesh. Morning. Thanks so much for speaking to us. Tell us, how do you approach these stocks? You know, non-ferrous, that it seems a bit of a tailwind because there's talk about banning some Russian supplies. And various other capacities are shutting down. How do you weigh the two and your preference?
So, Nigel, the easiest way to figure out whether there's actual physical shortage or not is to look at physical premiums in various regions. And physical premiums have been dropping. So, despite all this chatter about, European energy crisis leading to production cuts, the demand is getting destroyed much faster. Secondly, recently the uptick in metal stocks have come from this news about LME banning Russian producers to sell their material into LME. See, we need to understand that what has happened into oil is likely to happen in aluminium and zinc and other metals also. There are willing buyers in form of China and India who are willing to take the material. So I don't think material or supply is reduced because of this LME decision. It is just a sentimental impact in the near term. And there's no real take in physical premiums to say that there's any shortages because of this.
What does one do with a stock like, say, Tata Steel, Rakesh, now? I mean, that stock has done nothing for investors. If anything, it has just, eroded wealth over the last 1 year. At some point, do you see a turnaround?
So, Sonia, at some point, every stock will turn around. But right now, it's not the time for Tata Steel, I would think. There are two main factors. One is that we are looking at a very weak Q2 results coming in. And number two, you are already, hearing all this news about the way bond prices have moved in Europe. And we are not sure what will be the impact on the pension liability for Tata Steel. So these two things, even though valuations are not that expensive, I would think investors should stay away till the time we have more clarity on these two issues.
Rakesh, can you explain that? Good morning, Prashant here. Explain that physical premia point a little bit. I mean, what is that and what does it signify? One. And second, you referred to oil, said what's happening to oil will happen to other commodities. And I don't know if you have a view specifically on oil itself. Many believe it's breaking out of a 4-month downtrend. Go on.
So, Prashant, physical premium is nothing but, a charge over LME price. We all see LME traded price, which is what we track. But when you physically deliver the material, there's an extra charge which you have to pay. And that depends on freight cost and demand supply and all those things.
Okay.
So in Japan, which is the highly tracked market for physical premium, last quarter the premium was around $133 for aluminum, and now it's dropped to around 88.90. So that tells you that there's very less physical demand for the material. Coming to the second point, what I was mentioning is that, see, LME is the last resort buyer for metals. Because when you're selling to other markets, to actual consumers, you are getting that physical premium. So I don't think Rusal or any other Russian company would be looking to sell just to LME. They would be largely looking to sell to actual consumers. And there are plenty in China and India who would be willing to buy that material if it's like $20 lower in terms of premium. So the reference to oil was that India is buying Russian oil at a cheaper prices at a discount to the Brent crude price that we see. So the same thing applies to other metals also.
Okay, all right, Rakesh. In the past many years that I'm tracking the sector, and you have been tracking longer than me as well. We have seen at times some of these metal stocks, they get some bit of a base at around half times price to book. Now this time around, some of these balance sheets are in far better shape. Where do you think there'll be some kind of base in terms of a price to book value, if that's the matrix we should track?
So Nigel, when companies are under high debt, 0.5 or slightly lower is the right metric to look at. But when balance sheets are fully repaired, probably one time is where a stock should bottom out. But since we're discussing a company like Tata Steel, and there are unknowns in form of what could be the liability from the pension, probably I think it will be, historically it has bottomed at 0.5. Now, because Indian balance sheet, etc., is looking good, maybe 0.7.
A quick word on Coal India, if you track it. I mean, that stock has had a very good run, and even the production data, the offtake has looked good in the month of September. You like it?
So, see, Coal India has a strong tailwind. One, they are doing very good work in terms of execution and producing coal, trying to meet India's demand. And secondly, around 16-17% of their production is being sold at e-auction at around 350% plus premium. So this is giving them a good tailwind, and they are likely to report strong results. This can continue for another quarter or so till the time European winter is out of the way. So there is still some tailwinds to Coal India stock even from here on.
Okay, all right, Rakesh, thanks so much for joining and giving us your view. Clearly, you're sounding a little bit cautious on the space, though as you mentioned that since balance sheets are in far better shape, some of these metal stocks, they may not go all the way to around 0.5 times price to book. Maybe we could see, like for Tata Steel, basing out at around 0.7 times. For the time being, slip into a short break. You come back, we'll get straight to pre-market opening, and we'll also be joined by Aman Desai of Aether Industries to talk about their business outlook.